Nigeria's Minister of Finance, Budget and National Planning, Zainab Ahmed, says debt relief agreement reached this week to help the world's poorest countries deal with the coronavirus pandemic was a welcome first step, but that middle-income countries with debt challenges also needed urgent help. Mrs. Ahmed, who is expected to deliver a remark at the World Bank's Development Committee meeting today, said most countries in sub-Saharan Africa were particularly vulnerable to the pandemic because high rates of self-employment meant social distancing could not be sustained for long. Mrs. Ahmed, who also spoke on behalf of Angola and South Africa, supported a call by African leaders for $100 billion in aid for the continent to deal with the pandemic, with $44 billion earmarked for immediate debt relief. She welcomed an agreement by the group of 20 major economies and the Paris Club of official creditors to suspend debt payments for the poorest countries through the end of the year, and urged the bank and other multilateral institutions to explore ways of participating in the debt relief initiative. And as the fight against COVID-19 continues, let's take a peep into South Africa. The International Monetary Fund, in its regional economic outlook, projected South African economy to shrink by 5.8% this year and see a rebound of 4% in 2021 if appropriate measures are taken to tackle the effects of the coronavirus. Also, ratings agency Moody's has cut its forecast for South Africa's economy to a 2.5% contraction in 2020, citing the impact of a nationwide 5-week shutdown aimed at limiting the spread of the coronavirus. All right, joining me now to put all of these into perspective and how things have been playing out in South Africa is an economic analyst there, Trinity Nkube. Good afternoon, Mr. Nkube. Thank you for joining us.
Good afternoon, and thank you for having me again.
First, let me get your thoughts on IMF's growth projection for South Africa, 5.8% for a country already in technical recession, coupled with the impact of the coronavirus. Was that in line with your expectations?
I suppose the IMF's projections are a bit generous from my own analysis. However, I tend to be corrected. Some of my professional networks are looking at about 10% of the economy shrinking. However, it remains to be seen, because what we saw yesterday or the day before has that been some of the sectors, for instance, mining, are going to be operating at least at 50%. So we're looking at probably, if we can get some of those major sectors, mining, manufacturing, and agriculture, perhaps that could cut off the losses. Perhaps that is why IMF is also looking at that. But they're also looking at the reforms that have been pushing all along, that if the best case scenario, if the reforms are put into place, then things won't be as bad in 2021.
Now, the country has the most confirmed coronavirus cases in sub-Saharan Africa at 2,415, a number expected to rise significantly as more tests are conducted, and of course the national lockdown, which started on March 26. How much impact has that had so far on the economy, and which sectors are taking the hardest hit?
Well, the small to medium businesses have really been affected by this pandemic. So when we also look at tourism, entertainment, restaurants, and all of food and beverages and so forth, those have been hard hit because they're trying to push before the winter comes into play. So these sectors have really been hurt badly. However, there are ways in which they're trying to mitigate some of these, where people can even order through delivery and so forth. However, you see, alcohol plays an important factor, again, when it comes to the resistance against the virus. That's why there's been a crackdown on this, and cigarettes and so forth. All these sectors have really been badly hit.
And how successful has this lockdown been? And what manner of palliatives have the South African government put out there at this time so far?
I must commend the government. They have really been strong and decisive amid some pressure to sell booze. I mean, some people have resorted to brewing their own alcohol indoors. So that tells you how desperate people have been. Some people obviously will not listen, but the government has been firm in terms of the lockdown stance, and they're trying to look at a way of phasing in when the lockdown finishes, that people can actually start going back to work. I'm not very optimistic that's not going to happen anytime soon, because now we're looking at winter, where you also have a combination of all these other complex flus and all. So we're still in for a rough ride.
And what would all of these mean for the country's credit rating, which is already at a junk status, according to Fitch and S&P?
We are clutching at straws. I don't see any positives at this point where we were already in trouble before the virus. I mean, the virus couldn't have come at a worse time. So we're looking at, all our banks have been rated junk. The economy is in junk status. It's going to be very difficult to borrow. Hence, we'll have to go to the IMF. We shouldn't have been, but that's where we are.
All right, so you're supporting that call for South Africa to actually channel its attention to IMF to borrow some money?
I'm not a big supporter of the IMF and the World Bank. However, in the situation that we are in now, we need the cash, or else we can't keep cutting interest rates. We can't print money either, and we don't have the money either. So what's left is to just go to the IMF and get whatever conditions there is put on us.
All right, so what's the outlook for the second quarter?
The recession will ensue. Let's see what happens with some of the mitigating factors the government is going to put in place. Perhaps if we get the debt relief, then things, we can start to see the recession, not being as bad as it is being projected at this point.
All right, thank you very much for your time, Trinity. Trinity Nkube is an economic analyst in Johannesburg. An Ethiopian Airlines group plans to seek help from the state if the coronavirus crisis impact on global travel persists for more than 3 months. Africa's biggest airline chief executive officer says the airline can survive off cargo services until early July, but if it goes beyond that and worsens, then they will consult with the government. The state-owned carrier has until now insisted that it will not become a burden for a country that's already battling with food shortages and the COVID-19 pandemic, which has wrecked economies around the world. But salaries, loan repayments, and cost of leasing planes are proven a burden as revenue slumps. The airline is banking on winning cargo contracts with the likes of billionaire Jack Ma's Foundation and the United Nations, which are attempting to fly in medical supplies across the continent. Ethiopian Airlines lost $550 million in the 4 months through April and is operating at 10% of capacity as travel bans limit flights. And Kenya is planning to ban direct tea sales and will enforce an electronic trading auction system as part of reforms following an industry probe ordered by President Uhuru Kenyatta. The industry investigation came after small-scale farmers complained about the Kenya Tea Development Agency, the company that markets most of the produce for the world's biggest exporter of black tea. Tea will be sold exclusively through the auction process. Henceforth, sale by private treaty, commonly known as direct sale overseas, is outlawed. Tea contributes about a quarter of Kenya's total foreign exchange earnings, and the East African nation earned 117 billion shillings from exports last year when it produced 458 million kilograms. And that's a wrap on the show for today and, of course, for the week. Thank you for being part of it. I'm Chimezie Obi Iwabu.